Yo guys, what's going on? It is Friday, August 19th, 2022, and the market has taken a huge dump. It has crashed a lot. However, check this out. If you watched my last video, aka the video from Wednesday, August 17th, you could see that I had ETH game plan right here, and my ETH game plan was to buy at just about $1,700 to $1,760, and that is precisely what we ended up falling down to. So we fell from, $1,850, $1,900. Actually, on the 17th, almost 19, even 1950, all the way down to the buy price that I set. And now we're currently at 1723, so we're just within that zone of what I wanted to do. So I bought. I'm sticking to my game plan. The big and the important thing that I want to put out right now is that I bought. I had a game plan. Okay, so it's not like, oh, big dump, and so I buy immediately and I don't know where I'm going to sell if I am wrong. So you always need to think about where will you be if you are wrong. And so going back to this, my last market update, I had the buy price for the 1700s, and I have my stop loss in play because this is a really big support. So if we actually go back here, you can see this is a huge support. I buy at the support. I sell at resistance. And we still have a long time until the merge. So if you look on crypto Twitter right now, you'd think that we're at, 1400 or something already. But no, we simply fell. And we broke the diag, which I figured we were going to do, but we broke it and fell right into the actual buy zone. And now it looks like we're actually moving up. So, I bought 1760, 1710. And, if this ends up not working out in my favor, if it doesn't end up going back up towards the merge, which I do believe it still will. Like I know a lot of people and are saying that it's over, we're going down, we're going to hit 1400 and then we're going to go below that and we're going to hit the, $1,000 again. And yes, I do believe we will eventually hit that, but fundamentally speaking, we still have 23 days until the merge, and that's the biggest update in ETH history. And you know what? If I lose because the price comes down and I lose, 7% or something, oh my God, I lose 7-8%. I'm not losing 50% of my portfolio on this one trade. I'm not losing 10% of my portfolio on this one trade. I'm just going to lose 7-8%. And that's not even of my entire portfolio. That's simply 7-8% of what I put in. So I just want to say, you need to have a game plan, because trading is all about statistically or probabilities and if-then statements. So what I mean by that is when ETH was up here, I said, if ETH comes down to 1700, I'm going to buy it. If it does that, then I'm going to buy it. It did it, so I bought it. However, I also have my stop. So if ETH comes down, breaks down below 1650, I have a stop in place. So I already know how much I'm going to lose. My thesis is wrong. If my thesis of, okay, I'm going to buy this, for the merge is wrong, and which is a fundamental play, then it's like, okay, I know how much I'm going to lose and I accept it and I'm okay with that. So that's really important, because I know that a lot of people, they'll just buy and then it goes down even more and then they'll buy even more and then they'll freak out and say, I don't know what I'm doing. And then they can't take it anymore. And they go through the 5 stages of loss and grief and like denial and all this other stuff, right? And then finally they'll just capitulate. But no, you got to have a game plan. So trading is all about having a game plan and then executing that plan. So create the plan while you're nice and relaxed and before everything happens. And if you miss out because it doesn't hit your buy, you know what? That's okay, because you had your game plan and you're not going to catch it all. It wasn't meant for you if you miss out on your buy. Speaking of that though, I do want to go into the other thing that I want to talk about, which is having multiple accounts and having 2 accounts. So one of my accounts, if I bring this down here, I'll write it out for you. And so I just wrote this out. 2 accounts minimum. Have one account be your trading account and have your second account be your long-term investing or long-term swing trading account. So as price goes lower, you want to put more capital into your longer term investing or swing trading account. And then as prices move higher, you want want to put more money into your trading account. So this happens during the market cycles. And I'll go back to ETH, the whole chart. Let me see if I could find one without all this stuff. Oh, actually, I'll just do this. So let's say that you're in ETH, right? You love ETH and you think that ETH is going to be $10,000 one day, which I fully believe that ETH will be $10,000 by 2026, if not $20,000 by 2026. So why would I not want to continually invest? And so here's the market side. Here's one of the market cycles right here. Accumulation followed by a move up, followed by a downward move down, followed by more accumulation, right? And then finally the accumulation into a move up, followed by a downward, a move down, which will eventually probably go into something like this, accumulation down here, just like how this had this accumulation down there, right? Before a new market cycle, which will bring it, all the way to $10,000 and make this look like peanuts, right? That's why I say have two accounts and make sure you're accumulating in this region right here, from here to here. This is where you want to be accumulating as much as possible. And because trading this is really difficult, right? Most people aren't good enough to be trading it. However, if you have a smaller account that is your trading account, you can stay in the market and be trading this, and then you'll know exactly when to get in your trading account or to go really heavy. So for instance, back here when we had this low and then it came all the way back up and it broke this market structure right here, what you would do is you would look right there at this weekly order block and say, okay, I want to get in at this weekly order block, the down move before the up move that finally broke the market structure and broke it all the way up there. Boom. So you would have known, okay, get in at $91, $92, or maybe you say like, okay, $100 is where I'm going to throw all my money in, and you just throw it in at $100. Maybe you throw it in at $100, back here, and you ride this all the way up, and then you ride this all the way down, but it's your longer term investing account, so it's fine. And then you keep on, you just ride it out to the next cycle. I just want to point that out, that I do personally myself have multiple accounts. One of my accounts is dollar cost averaging into Ethereum and Bitcoin and a few other coins every single day. I'm literally buying like $1,000 of Ethereum every single day. I plan on buying Bitcoin and Ethereum every day for the next 6 months minimum. So even if it comes all the way down here and stays at $800, around $700, $800, or even if it goes all the way down to $400, $500, right? I don't think I think that it's going to reach the 88% at $600 and $663, somewhere around there, like maybe between $600 and $700. And that's where that's where I think it's going to be. Even if it goes lower, it doesn't matter, because I'm going to be I'm going to continue dollar cost average in my investment account. So maybe I'll take a L in my trading account when I put my trade on and go in very heavy right around here if it reaches that. But it doesn't matter, because even if it goes down and I take the L on my trading account, my investment account will still be accumulating more and more and more. And as the prices fell, once it fell below the 78.6, that's when I was like, okay, I need to have more in my longer term account. So actually, it's not 78.6 is my determining factor. It's the 75% is my determining factor. And so I started to accumulate, start accumulate. I've been accumulating. I actually accumulated this entire wave up, and I'm going to be accumulating this entire wave down if it does fall back down. So wanted to share that because I know a lot of people have all of their money in one account, or they want all of their money in their trading account. But I guarantee you that you're going to make a lot of money, or you're going to have a lot of money in if you have at least one account that you just dollar cost average into. I mean, think of the S&P 500, think of the NASDAQ. Yes, trading it is amazing, but like the best quote unquote traders, according to the study by JP Morgan, were the people who forgot that they had accounts, or the people who just put their money into it and then never touched it. So I just want to emphasize that point. However, obviously, I still have my trading account. I'm a trader, and I am still trading. And so I will be continuing to trade and looking for big opportunities in the market. So that's what I'm doing. And I'm going to, and I guess with that out of the way, let's go on to the market update. Okay, guys. So let's start off with Bitcoin. We got Bitcoin on the monthly. Like I've said before, the big monthly levels that I see using the Fibonacci from this move down. So I'll explain this as well. I'll explain Fibonacci. This is going to be, in my opinion, 5 waves down because we're in a bear market. So normally it's ABC down, but that is only ABC down in a bull market. But in bear markets, it's usually a 5 wave down. So, and if you don't understand that, just look into Elliott wave theory. But pretty much this quote unquote could be A, B, C. But I think it's going to be A, B, C, and then come up. 1, 2, 3, and then come up to be a 4, and then come down to be a 5 somewhere. And so what you do with that information is you take the Fibonacci from the top to the bottom and you look for areas to go short. So the 38.2 is a really good area to go short in a bear market. So bottom 38.2 was right there, and that was at 46,700, 46,697 to be more precise. And so that's where you would go short, and then it's like, okay, that happened. So, and then you would target the here, where is it? The negative 23.6. First, you would target the 1-to-1 at 32,937, and then the negative 23.6. And if you're feeling crazy, then you would target the negative 61.8, which is $10,676 right there. That's on the monthly, right? So that was the first leg down, and then the second leg down, you take it from the top to the bottom, which I already did right there, and you can see top to bottom retraced to the 38.2. That's 29,289. That's why I still think that we have room to get there, because it's Fibonacci. Like, what are we just gonna stop? Are we just gonna stop at the 23.6? Maybe if I'm reading this wrong because on the weekly there's something else, then we could stop here. But I still think that we're gonna reach 29.2. So that's the monthly. But let's go down to the weekly. Maybe there's something else on the weekly that'll show us something different. Okay, so this is the weekly chart, and remember, from the monthly chart, it was from this top to this bottom, and then wait, hold on a second. On the monthly chart, it was 48 192 to 17, 48 192. These numbers are slightly off on the different charts, but it doesn't. They're fairly close. So on the weekly chart, from the top to the bottom, you have, let me get rid of this. You have the 38.2 at 29,000, basically 29k, and we reached the 23.6, and then we fell. Usually, yeah, there's a reaction from the 23.6 on the weekly, sure, but is that it? Like, no, I don't know. I don't know. The one thing I will say though, just like a quick side note, is that there is this on the S&P 500, which is extremely concerning. So maybe it was the top, and it's just hopium that, like, it's literally just hopium that Bitcoin reaches the 28k region, because stocks are highly correlated, and this is a topping formation for stocks. So if the stock market breaks this, and I'll do this in down the road, but if the stock market does break this, then that's bad. Then I'm out. I'm gonna be out, because this is a swing failure pattern over this previous top, and that's gonna be terrible. But it hasn't broken it yet, so I'm still in. Anyway, that's weekly. That's the weekly chart for Bitcoin. Go back to that. Okay, boom. So that's what I'm hoping for, and this might be a little bit too generous. It would probably be something more like that, or maybe even something like just a little bit lower, to be honest, because it's gonna be tough. It's gonna be be real tough for Bitcoin to go up 34%. But if it does, that would be a 64% rally off the bottom, and that's not unheard of. So I do have I still have a long bias, at least going into September. We have 10, 11, 12 more days of August. I think I'm hoping that August sees a turnaround. But of course, I have my stops in place, and I have my invalidation point. So that's what's important. That's the important thing to know. So let's go from the weekly down into the daily and see what we could do. Daily, this does not look good. This looks really bad, to be honest. So the daily, we had the major support. We did have this break of the support, which was simply a stop loss hunt, a stop loss hunt right there on the daily, because you could see this is what this was. This is a stop loss hunt on the daily, followed by a break in the market structure right there, or if you count this, then break in the market structure right there, followed by a retest of the order block here right there, which was the one that broke the market structure, which then retested and then created a new high. So now on the daily that we came down and we broke the market. Let me get rid of this. That we broke the market structure to the downside. That's obviously really, really bad. So on the lower time frames, honestly, shorting is the higher conviction play. So I would put a short from 2360, basically like this. This is the up move before the downward cascade that broke the market structure. So I would put on a short term, maybe something sort, I guess something like this. Although I would actually target probably even further down, and this would be on my shorter term trades. And this is why doing a market update every single day could get confusing, because I have a longer term, obviously, like I mentioned, I have my longer term swing trading account and investing account, and then I have my shorter term account. So on the short term, I'm not gonna lie, obviously this is really bad. It broke the trend line right there, and it broke the market structure pretty much right here. So any move up is for shorting, but I do think that we should see move up. However, if we don't, this is pretty much it. This might be it. Like this level literally right here at 21,256. And so drawing the Fibonacci from the bottom of the move up to the top of the move, you can see that we hit the 50% right now. We're at the 50%. If we break this, obviously 2,502 is the next level to long. So if we break this, the buys that I had for Bitcoin, I did buy Bitcoin on this move down. I bought it. So if we break 21,256, I'll probably just get out of my buys and wait until at least it gets to be into this zone right here, which makes sense that this would be a zone, because not only is it 61.8, but also it could be considered a potential liquidity hunt for market makers, because this is the equal low right here and here. And so if it comes down in here, there's probably a lot of people who have their buys at this low right here at 21,256. Right underneath of that, they probably have a lot of stops, so they could get stopped out. The market makers could pick up all of their stops and move the market, upward from there. So this would be my next area on the short term. And so that's my game plan for Bitcoin. And so now I'm going to go into Ethereum. Okay, so first off, we have Ethereum on the monthly chart right here. And like I mentioned before, Fibonacci, you get the Fibonacci from the top to the bottom. Look for the 38.2. And the 38.2 was hit at 1911. And the next stop is the 50, and then the next stop is 61.8. Obviously, the 61.8 would be absolutely fantastic to be able to reach that. I don't think we're going to reach that, to be honest. I really just don't think that's going to happen. However, 50%, I could see the 50%. This is honestly where I wanted to look for short setups, because I figured everyone was going to short at 2,000. So I said to myself, all right, I'm going to, instead of shorting at 2,000, I'm going to wait for, a pop up to 2,200. Actually, I think it was more like 2150 or something like that, and then short it. Obviously that didn't happen, so now we're looking at this candle. We still have 12 days, so the monthly, you can't really say what's going to happen. However, looking at it from the monthly chart, from the monthly perspective, I am hoping that we still get back up here, and then as I go down into the lower time frames, I'll look for where I'll place my stop losses and everything like that, because obviously I bought it at 1700 or 1750. So that's the monthly chart. And on the longer time frame, speaking about Ethereum on the longer time frame, I already mentioned $600 to $700. That's where I think we're going to get a nice bounce off of that area, because that's the 88% from the bottom to the top of it. Okay, so now let's go down to the weekly and look at the weekly levels. So we got the weekly levels. This is the merge, happening somewhere right around here, and this is the big support and resistance. It's also the 200 weekly moving average, exponential moving average. That's a big exponential moving average. So we did get the bounce off of, we didn't really get the bounce off of that, but we got the bounce a place that's very close to that. And we're literally we're just squeezed in between these EMAs right now. The weekly RSI is above the midline, which is good. The stochastic RSI is really high though. I don't like that. And then the MACD doesn't really tell us much. So that's the weekly. Maybe the daily can give us a slightly better indicator. Okay, so yeah, on the daily, like I said, big support area over here, big resistance, and then broke through it, retested it, And then I could even, bring this down right here back to the retest. It looks like we retested it perfectly. This is what I was looking for. So let me go down to the daily hour, to the 12 hour. Actually on the daily, do we have EMA do something? No, not really. 12 hour. Yeah, we got the market structure break right there. We got this was pretty big indicator. Yeah, once we got this followed by a move down, and which was a market structure break, could have potentially actually put on a short position right here, probably I'd say like right in this area, which would have worked out perfectly, right? Targeted down here. Where your stop would have went, maybe if we go down to the 1 hour, we would have had a better entry position. So it would have been something like this right here. This is what I would have done. This goes right there. This goes right there. And then the target is 1700, something right around there. And that would have been the trade. Would it have worked if we would have been filled? If I would have been filled, it would have been right there on that wick. Sometimes I get filled on wicks, sometimes I don't, but like that would have been a solid trade setup. So that's why this is also why I'm doing these market updates every day now, is because I do want to do these like more intraday trades, or these really good high RR trades, which you can't really see on the swing trading on the higher time frames. So I explained why I'm doing that a couple of videos ago. Basically I used to only look at the 4 hour, the daily, and then I would make my trades based off the 4 hour. But I started to notice that in this environment, the 4 hour wasn't giving as good results as the 1 hour in terms of risk to reward. So maybe on the 4 hour, let's see if I could think of look at an example of this. So yeah, on the 4 hour, we have the move up before the huge sell-off, and then the breaking the market structure. So yeah, on the 4 hour, where is it? This would have been there. This would have been the trade setup, right? Let's say you would have entered on this candle right here is where you would have entered your short position, and which is after the retrace, and then you would have targeted down there. So this is 4.79 RR, right? That's on the 4 hour, and it would have worked. It would have been fine. But look at it on the 1 hour time frame, and instead of using this candle, you move it to this candle and you bring this down a little bit. That almost doubles your RR. That almost doubles your risk reward, which means that you could put on double the size and make double the profit potentially with the same amount of risk. So that's why I'm starting to do these daily updates and look for these type of trade setups, because I have learned some really just, I don't know how else to describe it, just wicked freaking good trading techniques over the last week or two. And so I'm really trying to hone in on that even more so. And so let's see if I could, provide that for you. And so honestly, even looking at this right now, looking at ETH right now, 4 hour chart, hit the 200 EMA and the 200 moving average, bouncing off of it. We have 2 hours left for this candle to close. But if we do, this is a swing pattern. So we have a swing, we have a low, a lower low, and a higher low. That right there is a swing, which means that this could be an entry position. Not only is it an entry position, but it's also based off of the price action, but it's also an entry based off of the fact that it's in this support zone. So that's a good way to trade. You look at the big support zone on the higher time frames, then you narrow it down onto the lower time frames, and you look for trade setups. And right now on the 4 hour, it looks like a swing pattern, a bullish swing pattern, right? And then you could go down to the 1 hour and you could say, okay, here's the 1 hour chart. Let's say I am bullish. Here's the this is what I would do. I would look, okay, down candle for the up move. So I would put a long position on here. I would put my stop right there. And let's say that I do think that this is the bottom. Okay, where would I target? First target is 1800, because that's this high. Honestly, next target, why not? The next target could potentially be literally up here, 25%. This is a 14 RR, 14 R trade. Why not? So this is a daily, so I'd probably do like that because of this 200 EMA. But still, you see what I'm saying here when it comes to putting on better risk reward trades on the lower time frames, because this is definitely something that was a sticking point for me over the last couple of months that I've learned, is because I would get stopped out, but I'd get stopped out like I would do trades like this one with on the higher time frame for a 6% loss when I could have waited, honed in, and get the 1.77% loss instead. Wanted to share that, and that's Ethereum. So yeah, if Ethereum comes down, if it comes back down to what is this level, 1647, 1648, I'd probably get out. Okay, and then the last two things I'm gonna look at is ETH BTC, and then the obviously just reiterate the just reiterate the S&P 500. So this is ETH BTC. Obviously we came up above here, which was the major resistance point, and we still have not touched this top. So I would love to touch this top. So if ETH against Bitcoin comes up and touches this, 0.0823, that's I'd probably want to sell my ETH no matter where it is, once it reaches up to this level, just because it starts to get a little frothy up here. You know what I'm saying? But we're still above these previous highs right here. That to me is good. I mean, this is potentially this is bullish. So I'm still in favor of Ethereum, and up until September. So we have a week and a half left, because September is historically pretty bad, if I remember. This was last September. Look at this, September 1st, like literally starting on the 1st all the way through October, and basically all the way through mid-October, starting from September. And let's look back at ETH. Let's look back at ETH last September as well. Look at this. September 1st basically marked the top of ETH, and then it fell down. I'm sure the same thing happened with Bitcoin back in September as well. So September, right over here is September. So Bitcoin moved up, but eventually September did end up being a negative month. September has been a historically bad month for Bitcoin. Well, I mean, this was just last year. Let's look at it maybe in 2020 as well. 2020, August, September, boom. Look at that, like clockwork. September is a bad month. I want to be out of all of the markets, and this is what I'm gonna do. This is great, because I'm gonna make an alert telling everyone this. So also in 2019, September 1st, boom, September, bad, terrible month in September. I might actually short the market. I might actually just simply short the market in September. 2019, 2020, 2020, 2021, three consecutive Septembers like that have been really, really bad. Yeah. Ethereum, damn, you have to go all the way. Look at how far back we have to go. September, Ethereum. Yeah, everything's bad in September. So I do not want to be in the markets come September. That's absolutely for sure. So let me do this. Let me go to my Bitcoin on my trading, reset the chart, go to right here. I'm going to put in a vertical line on August 31st. It's going to be a red vertical line. And I'm going to put an alert in, and I'm going to say, let me get rid of this webhook. I don't need that. Send an email, Doug. And I'm going to say, everyone get out, sell everything. September is a historically terrible month. I'm getting out of the market entirely and looking for short. Okay, so when the price crosses the vertical line, when the price crosses here, I will have this alert go off, and it'll go off and it'll alert everyone in the VIP, and then they'll know. And so I'll definitely be looking for shorts. So we'll see what happens, but yeah, that's also a game plan. So you have my low time frame game plan, you have my Ethereum merge fundamental analysis game plan, you have my price action game plan, and you have my time sensitive game plan now as well. So we have all of that. And then also I will be continually monitoring the S&P 500. This does break down and break below this, this high right here. It already broke, obviously it broke this market structure right there, which was bad. But if it breaks this market structure right here at 4,200, 4,215, then I'll be looking for shorts on any bounces. And that's going to be the daily market update. Hopefully you like this. I'll try to put out more videos. Now that I'm feeling a little bit better, my back is better, everything. My voice is still a little shot, but I'm trying to put this out. Hopefully this was not longer than 30 minutes, but if it was, hope it provided you value. Trying to provide you a lot of value, and I'm gonna put out a lot more videos to try to help you as much as possible. So thanks again for watching. I'll talk to you hopefully tomorrow or maybe even later today, and I'll see you in the next one.